Hello and welcome to another episode of the Uranium Market Minute. Today is Wednesday, March 9th, and this is episode number 89. My name is Justin Hune. I am your host. I'm the founder and publisher of the Uranium Insider Pro newsletter, the only investing newsletter that focuses solely on uranium and publishes on a regular monthly basis. Before we get into it, as always, nothing in this video is intended to be investing advice. I'm not your financial advisor. This is not financial advice. Please always do your own due diligence when it comes to investing and always take responsibility for your own choices. All right, thank you again for being here. I have some interesting details to share with you. I had a in-depth conversation this morning with John Chimpaglia, the CEO of Sprott. And if you are a member of the Uranium Insider Pro newsletter, there's going to be a video update posted this evening on the website. I will send out an email bulletin to notify you of this, where I'm going to get into the granular details of this conversation because I feel that it's very important to understand what's going on in this market. But today I'm going to share with you on this podcast a couple of those details. But of course, I'm going to go into much greater depth in this video update for members this evening. Either way, some exciting stuff happening in this market. And I will get into all of that a little bit further in the mailbag section. We're going to discuss a couple of points from that conversation. And then, of course, what the heck is going on for the uranium shares, because it is now 30 minutes before the close of the market, and they are practically on fire here. So before we do that, I'm going to run through the daily scoreboard really quick, talk about the spot flows, the uranium spot price, the ETF flows, and we will look briefly at the charts. The spot price of uranium continues to move up strongly, up over $2 a pound from yesterday, $53.25 a pound mid-market. This is a new 10-year high for the spot price of uranium, and it's still almost $100 below the previous peak. There's a lot of folks that think that the price will breach that previous peak simply based on inflation. Once you get up above that $80 to $100 a pound range, it is all mostly entirely up to the financial players and how far they want to move it. So that is something that we are going to see in this market. When will we see it? Not really sure. That depends on how quickly we move now. The spot price is definitely in a strong trajectory right now. Spot yesterday brought in another 46.5 million in new capital, purchased another 200,000 pounds of uranium. We're now seeing big moves practically on a daily basis on a much smaller volume of purchasing, something to note. So now the Sprott Physical Uranium Trust holds over 50.3 million pounds of uranium. Year to date, they have purchased 9 million pounds and have raised 513.7 million in new capital, over half a billion dollars in 10 weeks. All right, there's some serious money coming into this space right now, you guys. Spot, they closed at a slight discount to NAV yesterday. The trust was trading down throughout the day slightly, with the spot price again up. So they were probably at a slight discount to NAV, although the trust, I believe, is moving in a good direction at the moment. So we'll see. Maybe they'll be able to raise a bit today. Their NAV has now risen to 2.74 billion. And again, they started at 600 million in July of last year. Unbelievable. Turning to the ETFs, both ETFs reported more issuance yesterday. 600,000 shares for URA and a chunky 475,000 shares for URNM. That's 47.1 million in new mandated buying. Again, of course, a new all-time high in outstanding shares. Year to date, these inflows into the two ETFs have given rise to 358.2 million in mandated buying. Money continues to come into the ETFs. These flows are really what matter most in this space. Valuations don't matter as much, honestly. You can do forward cash flow analysis on producers or expected producers and talk yourself out of being positioned, honestly. And it's just not the right. I mean, it's worthwhile to be able to do that type of analysis, but this is all about flows, and the flows are happening now, and we have a long ways to go with these flows. Yesterday, obviously, the trading action was pretty firm. Today, it was a little bit more tepid until this last 15 minutes or so before recording this. The last hour of trading, we're going to see some pretty nice moves here. So on that note, why don't we take a look at the charts? Starting off with URA, up big, 6.2% on the day with really big volumes here. What is happening? 5 minutes before I started recording, we saw from a Bloomberg terminal shared that the White House is considering sanctions on Russian nuclear power supplier Rosatom. So Rosatom is a massive player in the space and a huge provider of enriched uranium globally. And of course, they also are the provider of nuclear plant exports and all of the products and services surrounding that. So a massive player in the space. The fact that the US is even considering that has really big implications for the nuclear fuel market. And that's obviously what we're seeing with these price responses to that news. Of course, I've mentioned this multiple times before, but it's worth mentioning. This market is primed and ready for disruption. It's not like this is just some random event came out of the blue. This is the market has to be in a place of susceptibility to disruption in order for events like this to be able to move the prices and to move the equities in this way. And that's part of the thesis, right? So the thesis, generally speaking, is we've got a serious disjunct between supply and demand in a growth sector with very positive growing fundamentals in multiple countries around the world. That's kind of the basic thesis here, that the price of uranium has to go much higher. And then you add to that the fact that the fuel cycle that provides the fuel for this growth sector is very fragile and dependent on a very small number of jurisdictions for production of that material. So the market is susceptible to disruption. And now, well, that disruption is upon us. Sprott Physical Uranium Trust just absolutely up on stilts, up 3.4% on the day, 3.3%. It's moving. Volume is coming in. We've got 20 minutes left of trading, so they are likely issuing shares into the market currently. That's probably going to slow down this trajectory of the price of the trust if they hop on the ATM and start issuing into some increasing volume. Either way, what an absolutely beautiful breakout on this. Cameco, of course, perceived to be one of the big beneficiaries of the risk that is certainly being applied to the East. And clearly that is coming to fruition in the chart. Look at the increasing volume on this. Look at that massive, beautiful green candle up over 8% on the day. We are very, very close to breaching that high of November. The high close in November, just over $28. We're at $27.36 here. Just a stunningly beautiful chart. Look at those moving averages moving up. This is, I think this could be a really strong leg for the whole sector. All right, so on that note of the charts, which are obviously moving in a strong direction currently with the US considering those sanctions, you know, I've spoken a few times about this in terms of whether we actually see sanctions on Russia or Russia actually cutting the US off or the West off, or all countries, as we had heard that Putin was considering banning exports of materials until December outside of Russia, period. And whether or not uranium was to be included in that list, or whether or not he pulls through on that list is yet to be known. However, the perceived risk is important and it matters. If you are a fuel buyer for a utility, and you are seeking out material for delivery, let's say 2, 3, 4 years down the road, and you have options of purchase, even if you had access currently to, let's say, Russian enriched uranium at a price that was favorable, which it usually is coming from Russia, and even if the lender would be willing to risk capital for that purchase, what can happen between now and that delivery? What if you solidify this contract and that delivery gets cut off for geopolitical reasons, then you're back in the market potentially much closer to the time of that delivery, having to scramble for that material. And enriched uranium in particular is close to the end of that fuel cycle. You've got U3O8 converted to UF6, enriched to EUP, and then fabricated into fabricated fuel. So the EUP, a lot of times what utilities will do if they are more near-term uncovered is they'll seek out enriched uranium and then take it through those last two steps, enrichment and fabrication, to get that access to that fuel sooner rather than buy the U3O8 and run it all the way through the fuel cycle, which will take 12 to 24 months, usually more on the 18 to 24 month side of that time frame. So this particular situation, you know, whether or not these sanctions come to fruition, there is risk attached to all of this, and it's shaking up this market. It is happening. It's happening right now. It's unlikely to just resolve and go back to normal tomorrow, next week, or potentially even next month. this could go on for a while. And so in addition to that, there was another piece of news that was spreading around that I can't confirm that this is accurate reporting, okay? But essentially what it's saying is there was a video of some Russian seemingly oligarchs, let's say, speaking about securing Kazakhstan, and they actually named specifically uranium supply. Whether or not that is going to pan out, we need more information on this, but just hearing these things across Twitter and in the news flow is just adding to the whole concern of this entire scenario in terms of the fuel cycle. So I think that we could be on the cusp of a really, really big move here. And on that note, I wanted to share a couple of details of my conversation with Mr. Chimpaglia this morning. So, and like I mentioned, I'm going to do probably a 20-30 minute video for members tonight just on this topic, because I think it's crucial to understand what's happening in this market. But a couple of details that I want to note. One is that he is noticing that the amount of uranium that is up for sale is being more tightly held. So that I'm not going to say that the market is thin as in it's drying up and there's no uranium. That's never going to be the case. Okay. It's all about supply and perceived shortages or expected shortages. And oftentimes what happens is the opposite of what you think would happen. And that is that you would think that as the uranium prices rise, that sellers would be more willing to empty that material into the market and have an increased profit on what they previously expected. And what you'll often find is that as prices rise, sellers will hold on to that material. So for example, he mentioned that there are a number of entities that they've been buying material from over the previous few months. And over the past couple of weeks, those entities are not calling them. They're basically not offering up material as they were. That material was much easier to purchase in January. And even in this past couple of weeks, it is starting to tighten up. That's probably the primary point I want to make, besides all of these other bullet points that I will get to in the members video. But the material is tightening. And so that you're seeing that in the movement of the spot price, right? You're seeing 100,000 pounds, 200,000 pounds purchased by Sprott, and we'll see a $1 or $2 move. Now, of course, sellers are also watching the action of the SPUT vehicle and recognizing where the NAV is at and potentially raising that selling price to get closer to NAV of SPUT. So it's both. It's sellers now recognizing the big buyer in the space, which is Sprott, and raising their ask to match the NAV of SPUT. And it's also material is being more tightly held. And so this is a very precarious situation with the implications with Russia. And we're seeing the fuel cycle contract a little bit. We're seeing that material be more tightly held. At the same time, we still have a number of utilities that are uncovered, definitely out towards the 2025 to 2030 range. But there's also a number of utilities that are uncovered in a more shorter time span that might still need to cover. And especially if this price action continues, we could see somewhat of a scramble for material. So this is all coalescing at a very interesting moment. And of course, you know, this whole situation is so messy in Ukraine with the Russian invasion. We don't know exactly how this is going to play out, but clearly, this was and is a very, very fragile market for the commodity, and any type of disruption will see a reaction in the price. And so, like I already mentioned, you know, betting on the long-term fundamentals of the sector is where we sit primarily. But part of that is a recognition of the fragility of this market. And it's like, oh, did you predict this would happen? No, we didn't predict Russia was going to invade Ukraine. I'm not a geopolitical expert, but I know enough to recognize that a market that is reliant on, like if you go between Kazakhstan and Russia, you're talking about more than half of the production of uranium, period, on the globe. That is far too high of a reliance on a small number of jurisdictions for a bulk of the commodity. And so any sort of disruption to a fragile nuclear fuel cycle will see a reaction. And that reaction has started. How far will it go? We don't know. How far does the price need to go? Well, if we're talking about long-term supply and demand fundamentals and the growth of the sector, we know that we need prices at this point. If you're considering inflation and supply chain labor constraints, we're talking probably 75 to 85 a pound for the marginal cost of production for those projects that are higher cost in order to get to a balanced market at the later part of the decade. So we're here at 52 bucks a pound. The price of uranium is easily going 50 to 60% higher from here. And that's based on those fundamentals. That's not even considering the financialization aspect of this trade. Man, it's a wild market. You can tell I'm a bit kind of excited and sort of at a loss for words here. The news flow is just so frequent. And so, I mean, I hate to say bullish considering the circumstances, but there's other circumstances that are bullish too. We also heard the president, I don't want to butcher his name, but the newly elected president today of South Korea is the most adamant about restarting nuclear power plants in South Korea. So there's just yet another domino to fall. Very exciting space right now. Thank you for watching. If you are a member, like I said, look out for a bulletin email tonight that will be pointing you towards the video update I'm going to do about my conversation with John Chimpaglia. If you're not a member, if you're interested in our content, you can click the link in the description. You'll get a sample of a previous newsletter, and I'm happy to answer any questions you might have about our service. Thank you for watching, and we will see you tomorrow. Have a great night. Cheers.